Hello everybody, this is Anton Hopfel for Manapa and let's talk Bund. This is the recap of the early finished Thursday session of the morning of the Bund future because the moves already appeared we wanted to see and price then also got back now to value into some balanced mode. So everything I do expect with my hypos and from the cash open and market, from the Bund market, already appeared, and I'm not then looking anymore for further trades. Sometimes it takes a little bit longer, sometimes a little bit faster the market, sometimes it needs time till 10:30, 11 o'clock, and sometimes it's already finished. Right now it's 10:30. Anyway, what we can see is here that the price overnight made a new low. So here you see this in the overnight or in the late evening session from yesterday. After the weakness appearing with the US market, Bund fell down and even below the week 50, of course, below the monthly 50. So we had a nice, interesting distribution that we saw that in the pre-market, in the early pre-market, and also in the later overnight session was a little bit trying to find an accumulation. We can see an accumulation here. So this is where I made my 2 days, let's say, list, the 174.18 area around. So the lower volume edge of the pre-market, it also fits to this lower edge here from the distribution. And so let's see what my hypos were for this day. There was the range long level. For me, just a range long level. We see there's no initiative, no OTF, and we're getting into a balanced market for the case. What would we look then for responsive buying? This was for me measured around 815, 820, 174, 18. Like I said, these two matching areas from yesterday and today pre-market overnight. Hypo 2, short. If we see increasing sell volume into this level towards so we want to get into it before even reach or about this area, so 174.18, and then sell pressure needs to continue after maybe a pullback or no pullback, doesn't matter. It needs then to continue into the 174.10 area. We then have the targets 174.04. If more pressure, 173.93. If more pressure, 173.70 plus. We will see what market tells us. Hypo 3. Everything changing again, and we don't know, people getting back and some news coming in, and we see market more bullish. We would look for trend play. I would look for strong buying power with pullback before. At the intraday POC, we want to see initiative away from the POC, then towards the weekly HVE 174.44, so the high volume edge. You see this here, this area from this week here. This is a distribution where we're in close to the monthly 50. So I want to see they towards this areas here after pulling back, getting with buy initiative so that we can get above again this area here. So then maybe the targets here around the volume edge, and even if there's power to re-enter this higher distribution, the bullish distribution, even the VPOC of yesterday, 90 bigger distribution. So this will be then of course the targets 50, 62, and even 7 to 8. We will see. And what happened then? Market shows us the initiative away from PC short, so our hypo number 3 was very, very interesting. So no range long signs because look at the open. We have the open, little pulling back. First at the when you pull back again, first directly initiative away. Then first we couldn't be sure because you see they pulling back with a lot of rejection signs of buying. That means right now people trying to get here cheap from this edge, from the pre-market, you see this volume edge, and getting maybe in a long, people get out of the short position. You don't know, it's also still the open time, it's 9 o'clock, 1 and 30 seconds, so this is not very, very, very big impact. But what one could see is this pullback finds some absorption and more interesting, immediately new initiative to the downside, and then no more huge pulling back. That means this was the moment where I was watching because here was in this move a lot of volume already accumulated. That means we had some second kind of POC shifting down. It was not really because it was not enough for computing POC shifting down because it was only about 95%, let's say, from the volume transacted compared to this year. But for me, it is a shift already almost, 90, 95%. See here when I draw the volume profile from the open, and when I draw it to this moment where the initiative went away or pulling back here, pulled back to this level, and boom, that was watching this stick here, boom. You see here, look at this. This is just for drawing purpose. Do you see this here? This was at the moment PSC is computed here at 9:04, and see how close this was, what volume was transacted in it, and see how much more sell, also market selling appeared in this move here. So you see this here, transaction here and here immediately, and away from it then here. So for me, this was the area. It's also matching with this lower pre-market POC, and from the overnight session, the overnight high also. So it was definitely what I was looking for. Small pulling back here, you see. We cannot measure absorption because there was not a lot of material and not a lot of time when they tried to get out and get into buying again. So this is okay for me. We either see the absorption. If we don't see absorption, it's also okay. Then it's just no interest in buying anymore here. So that's okay, because no buying is super for a short thesis, and absorption by buying got absorbed is also okay. Important is then that we see, starting from this area, what I call right at this moment at the POC, this red line, I draw this red line to see this is the area where this POC, this area where we pull back, and you see now initiative away. Boom, this is important. Initiative away, and then no strong rejection. This is my open up sign for a contract. If it's in context with my hypo, with my big pick preparation, this means this is the activity level where I want to see this behavior. And of course, you read it, this is the area where I want to see it. So what happened? I entered my play, and I recognized that I got in here at the 174. Give me a second. 174.90. No, 174.15. I entered 9:05 and 14 seconds. All right. So this was here. This candle. So this was, I saw pullback. Not big, initiative away, no pullback. And now I recognize with my stop rule, I have to make a stop here from 7 ticks, because initiative away was this here, and I first starting 1-2 ticks above this area. So that means I was a little bit nervous. And the problem was, and we gone back to the situation with emotions, as I measure my emotions, physical sensations, emotions and thoughts, I recognized I was not feeling comfortable with the 7 tick stop, because I knew it was a initiative trade to the short side, but not in an overall short market. So you can read in my preparation, my first target was the 174.04. So that means this is a probable 10 tick trades, and it was a 7 tick stop. The problem was I recognized this after I opened, then that the stop need to be so high, because this is just my stop rule. I have this stop rule, and it's a very good rule for me because it normally works out. It not cuts my winner too early, but it let me stay in a trade with a reasonable stop. And so the problem was 7 ticks here were absolutely necessary for me at this moment. So I recognized, bullshit. And I don't like to have a trade with only about 1.25 risk reward situation, but it was one. So I was nervous. And what I made then, my brain tricked me. It's crazy to see after a long time, emotions still have, if you want it or not, will have an impact on your trading. And I'll show you what it looks like. My stop rule says, when the next impulse phase starting, okay, impulse phase is another initiative away, you see people getting more in the shorts, and this is of course important for me to see, and I make adaptive stop handling to this information. So my brain tricked me, and because I was nervous and my brain, my old behavior patterns tried to save me of a loser, yeah? It will relieve me from the pain that I could lose. That's interesting. It tells me, hey, Anton, this is already impulse phase number 1. You see this tiny little selling here appearing? See this here? This little in the delta? I said, all right, impulse phase 1. And this was to relieve me from the stress, right? Kind of. I recognized this later than when I analyzed it. So 10 minutes later, I analyzed it quickly, measured sensations, take a quick look, and I found out, wow, I really thought this at this moment. This is now the impulse phase 1, but this is, hey, not the impulse phase 1. Look at how tiny the selling was. This was just playing around, measuring bull bears. We're not sure, we're in these positions. The normal thing after initiative. All right, but for me, I pulled the stop closer now. And too close, because impulse phase 1 needs, I am allowed to close and put my stop now to the initiative from the extreme from the candle, so from the bar. So this is around the 20 area. This will be, for me, I measured it statistically, absolutely okay. I get the most good profits out of this stop handling. Anyway, this was impulse phase 1, so now stop was here at the 20. 20 means now only 5 tick anymore stop, so I fared a little bit better. But the problem was, when the real initiative came again, and this was here this moment, you see this is more like boom, 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 people more now getting back initiative again in the short side. I now say my stop rule says I can now pull my stop even closer if there's a microstructure 1 tick above. 1 tick above the microstructure, this is here the microstructure, so I was allowed at this moment to pull it now to the 19. And what happened? 19 then was touched, and with the little small pullback and lack of liquidity, they could extend this microstructure. And of course my stop was too close because I measured the wrong way. I was stopped out. So -4, it's not the world, I know. It's also now not about the P&L. It's about the process and overall to be in the money and making money. But just for you, at this very moment, just to understand what it is about to have an emotional impact on your trading, what then happens. What happened is, everything then ran perfect because the real initiative, IP phase, impulse phase number 2 was not this was IP1, and then this was here. And the IP2 worked out, so that means I couldn't know, but IP2 then got started, and you see, boom, initiative going out of this. We see we pulling back again to the next level here. What was built, you see this here, volume. When I draw the volume, you will see it, and initiative away here, bam, and you see we testing again the new PUC here, and again initiative. And this was important because we want to see initiative into the 10 level to say now we see a chance to get into the 04. And if this would not have happened, look at my hypo. You see here, we want to see the initiative into holding on into the, sorry, it's not hypo 3, by the way, it's hypo 2. I've written it down the wrong number. This is 2, not the 3. So we need to continue then at the 174.10 level to get to the targets 04, number 1. Sell pressure needs to continue. This was a definitive thing I wanted to see. If not, then we're waiting for the rejection signs on the buy side to close this trade very fast. Because then, for me, the probability to get to the 04 level is very, very low. So that means statistically, don't stay in this trade. But what happens? Everything was perfect and working perfect. You see initiative again, boom, here, delta, 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 into the 010 level, 474.10, and then reaching target. Double button, only first target reach, normal initiative by the sell side, buyers coming in bigger, 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 getting into the higher regions, taking out the POC, initiative away from the POC and back, boom, here, boom, boom, back to the pre-market value and the yesterday value, because when you look at this here, you see this is also the yesterday lower distribution. So that's just what happened. And in my case, I just wanted to show you today what it's looked like when you're just impacted by your emotions, and it's not then a technical error or failure, but you have to understand it is very good. So the key is it is very good to measure your sensations, emotional, physical sensations, emotions and thoughts, to understand what was then the mistake or what was the reason. And so I know now this was a lousy trade with a minus, a lousy trade with a losing. It's not a lucrative trade with a losing. It was a lousy trade because I was, let's say, influenced by emotions and made mistake then in my stop handling because emotions controlled me and tried to relieve me from pain of losing. So this is really interesting. And if you, and why do I tell you this? I could have told you I handled this very well and I made my 10 ticks here, but to be honest, what would this help? Nothing. I can show you here in my order fills. You see it here very clear what I told you to close the stop because I measured wrong, emotions driven. And why do I tell you this? It's not only that that you expect, and of course that I'm honest and tell you what the trading then looks like. No, it's not only about this. This is important, but it's for you important because think of it. What could this let if you not know if it's a lucrative or lousy trade? So that means it is a lousy trade. Again, I tell you because I was driven by emotions at the moment of the management phase, and the idea was right. in my beginning of my trading and even the years after, when I didn't know that this is important to know, because like the most people, I just measured a winning trade or is it a loser trade? Is it a winning trade or is it losing? When you know this, when you don't know, you may think now, oh, okay, I have to change my play. This is not working. This is not working because it is a losing trade. And then you will change your play parameters maybe. You will change your strategy. And then you're on the wrong way. You're bringing extra noise to the already noisy environment of a trader's life. The market has enough noise. You can be sure. It's hard enough to develop the technical understanding, of course, and how to read the market. But to bring the extra noise as a trader, then additionally, will make it a zero-sum game. You will lose money, definitely. So as I know, my play is still very, very good. And I know statistically, when I look at my score, now having an 83% lucrative trade rate, if I wouldn't know this, I maybe start now to get on the wrong way and say, I have to change my play, it's not working. Because most of the people think they're looking for technical things or looking for the holy grail in trading, looking for new indicators, asking me, what is your volume settings? What do you do? What is the meaning of a initial balance range measured from 8 to 9, 9 to 10? This is all important and wonderful and nice. But at the end, you're trading, you will become a successful and constant profitable trader, not because you're the best technical understanding guy. I can guarantee this. But at the end, if the technical understanding, market behaviors and strategy, of course, must be at the best level. Of course, you can stop. Don't stop to be the best ever technical on the technical side as well. But the last thing, if it's not also on the mental game is totally supreme, it will be a hard game. So today, not plus 10, but minus 4. That means 14 ticks difference. And it's a small, thin line. And that's just what I just wanted to show you. So this was the 2 days recap. Hypo 2 was it, not Hypo 3. Wrong number. I call it the Hypo 2. Ran very good. Everything happened what we wanted to see. That means we knew and now had a higher probability to reach T1 at least. Probability for 10 ticks. If you wanted to trade then the reversal and opposite side, I see some guys who did this. Very good, wonderful. This was not my play. It's just a rule following my playbook. This was not my play. I was not looking for reversal. But if you had your target here, seeing the leg and were looking for the reversal play, I wouldn't do this because I'm not looking for the into the knife reversal trades. But it's totally okay. I'm not judging over this. If you stay with your play and with your preparation, very nice. And I see you made some points here. Here back to the value where we're now in a balanced market. Wonderful. Anyway, that's it. The recap of today's session. It's the 26th of September, and this is Anton Hopfel for Manapa Trading. Bye bye.